Along to today's market analysis, the Sunday show. It's good to have your company today. We are well at it and ready to get into all things trading. It's been a fascinating week in the market. Hi, Veronica. How you doing? It's been a fascinating week in the market. We've seen some genuine weakness, more or less. That weakness has been predicted out of Gordon's show. One of our market analysts has been calling for last week, particularly Friday, to be a down day. Instead, we've got the big down day Monday, Tuesday, Wednesday, and then the pullback on Thursday and Friday. For mine, it's been a fascinating week, and we do look forward to seeing how the next week unfolds. I expect the team to come in and to give me some help with that reasonably quickly. So I'm just seeing a couple of things on in the background, and whenever you do things on Zoom, it can be a bit tricky to get back. Hey, everybody. Nice to see you guys. Great to see so many people in the room. I'm just waiting for Julian to come back in. I'll just drop him a line and see where he is. He won't be far away, I am sure. Let me just drop him a note quickly. Sorry to keep you guys waiting. I'd like to stay on... Right, I've got Ainsley in the room. I've got Geoff in the room. We will get around them. We've got a number of people in the room. We're just going to see if Julian is far away. I don't think he will be too far away. We will have a packed up show today. Let me get to this. So we're expecting to have Julian in a few minutes to do macro market overview. I know we've just done that in the bigger session. And hey, Lewis, how you going? And after him, we will have Ash into the market data, Ainslie at the Golden Edge, Shukri to do some crypto, Ainslie back on golden oil, and Geoff. Julian, how you going?
Guys, sorry. Oops, that was a bit of a... I do apologise. I was actually looking at charts and I got completely carried away. And when I was going, I spent my time going, oh my God, really? Really? Okay. So, thank you, Paul. Welcome, everybody. For those of you that haven't been with me for the last hour, welcome to everybody, wherever you are in the world, once again. And what I want to talk about today is key themes, okay? So when I think about key themes, I think about the things that are driving markets, both in my head and from a technical basis, what I'm seeing out there in the street. So I think we can safely say that the tail end of last week was a little confusing depending on which market you were in. If you were a corn trader, you had a very, very bad week. If you're a wheat trader, you had a bad week. If you're a gold trader, you were bouncing off the side drinking champagne on Friday evening. So there's a lot going on in different markets doing different things. And I also forgot to say, if you're a cryptocurrency trader, then what the hell was that last week? Elon, please stop talking. Just stop talking. And then I think the cryptocurrencies will be in a better space. So I think what's really important here is that there's a lot going on. There's a lot of volatility starting to appear. Now, why is volatility appearing? It's because everybody has positions that are one way. And I think that's the key thing here, right? So if you go back and look at some charts, right? You go back and look at some charts of any of the cryptocurrencies going back to last year. You go back and look at a chart of corn over the course of the last 3 to 4 months. Oh my God. If you go back and look at a chart of gold, oh, hang on, no, gold's been boring, hasn't it? So that's why maybe it was up on Friday. Interesting. Okay, interesting. Okay, and then if you go and have a look at some of the stocks as well too, you know, I think last week we can safely say Tesla did not have a good run. It bounced a little bit towards the end of the week, but didn't really have a great week, hasn't had a great month. Already not so good. It did go to 980, I believe in January was the high in that stock. And where is it now? It's got a 5 in front of it, so maybe not so hot anymore. Who knows what's going to happen next? Maybe eventually it might go a little lower. We'll see. I think the target in Tesla, for the record, is about 382. But anyway, right. So look, what are my key themes? Things that happened last week that worried me a lot was the jump in inflation. Now, people will brush it off because that's what people do. I don't. I'm a bond trader by precedence and by history. So as a bond trader, of course, I worry about inflation. That's my job because interest rates and inflation is inextricably linked. And so when I see higher inflation numbers, that concerns me. And if you're running leverage positions in any market anywhere on the planet, it should also concern you as well too, because higher interest rates mean that you probably have to start thinking about deleveraging the book, and if you don't, somebody else will, then you're forced to do it. So what happens is people tend to jump ahead because they all try and outthink each other. So higher interest rates traditionally aren't very good. So the question is, are we going to see higher interest rates in the very short end, or are we going to see higher interest rates in that longer end, that 10-year sector of the curve, where the Fed maybe doesn't have as much influence as it does at the front end? Well, the short answer to that is yes, they seem to be heading in that direction, stabilizing but higher than they were a week ago. And for those of you that look at a chart of the 10-year note yield, you look at an open high low close, you will see a crazy spike which happened over unemployment day. When was that? That was like already an age ago, but it was only 6 days ago. So here's the theme that I've got running through the world right now. Inflation is picking up a little bit more than people think. Now, what does that mean? When you combine that with interest rates, you can figure out what your real interest rate is. So you have a nominal interest rate and you have a real interest rate. So that's the interest rate adjusted for inflation. So interestingly, that means in the 10-year note yielding about 1.7 and inflation about 2.8, we have a minus 1% real interest rate. Okay, now who likes real interest rates better than any other asset class in the world? You've guessed it, it's gold. And Ainslie's just gone hooray. Which is like a great segue to her talk later on. And so I don't need to say anymore. All right. And for those of you that are interested, gold has been going up for the last 2 months. When we look around the world of assets out there and see how they're all performing, it's definitely the best performing asset of the last 6 weeks. Take note, everybody, because that is the key message that you've got to get, right? Let's get on the train of the things that are working and not worry so much about the things that aren't working. Okay. So this is how I'm thinking about stuff. Now, foreign exchange, how does that translate in foreign exchange right now? Here's my theme. When you look at the weekly charts, all you're seeing in front of you right now is a test of the previous high. It's going on in euro, it's going on in British pounds, it's going on in Japanese yen, it's going on in the Swiss franc, it's going on in the Aussie and the Kiwi, apart from the Canadian dollar. Now, interestingly, why is the Canadian dollar in a mind of its own? Well, the Canadians have always had, as we know, a mind of their own. They're a very nice people, but they have a mind of their own. They may also have a few commodities as well too. So what's going on right now is the Canadian dollar is the currency du jour. It is the one that everybody likes the best. Who knows where that's going to stop going up? I don't know, but when you look at dollar CAD, it just seems to be a progression downwards, and it's really hard to ever fight that. But it has been going down for months and months and months and months and months. So therefore, that trend is also long in the tooth to the downside. So I'm not saying there's a trend reversal coming. There's a risk of a trend reversal coming, which is the key thing. So be on watch, right? And with all the other stuff, if we are just retesting the top, is this maybe an opportunity to start thinking about US dollar longs? Just from a trading perspective, I'm not talking about something structural. I'm not talking about the end of the world or anything like that. I'm just saying that maybe there could be a time when the US dollar might rally. And don't forget, those interest rate differentials between the US dollar and everybody else are getting bigger and bigger and bigger and bigger. So how long do you want to keep buying all the other currencies for when you can just buy US dollars and get a super duper yield? 1.5% these days is something to actually get excited about. People get excited about that. You can't put a negative interest rate in your back pocket. Okay, what happens is somebody reaches into your back pocket and takes money out. With the US dollars, when you invest in 10-year notes, you still actually have the opportunity to put some money into your back pocket rather than have it taken away from you if you're trading European bonds. Okay, so there's my key themes for the week. How much time have I got left? I've got like a minute left. Guys, as far as I'm concerned from a trading perspective, let's see what happens. This is where sellers have showed up before in the currencies. Is it going to happen again? Be on watch for potential reversals. I'm not saying that anything else is going to happen apart from that's where sellers have showed up before. I love gold. Oil is always a tricky market to read at the moment. That's trading near the highs. And if you want a resilient sector of the stock market right now, you look at XLE, which is the ETF of the energy sector stocks. That has traded tremendously well versus the rest recently. It's almost like a low volatility long play at the moment versus everything else. So that tells you that the market is very comfortable owning energy stocks, which suggests to me that oil has got further to run into the 80s and possibly the 90s. The question is how we get there, because whenever you seem to be trying to buy it, it just comes straight back in your face again. So try and trade it as easily, as best you can, with a really wide stop loss. Be very careful, as we know oil is a bit like a cryptocurrency. You need to have big stop losses. And I'm sure Shukri will talk about those later on. That's it for me, guys. Thank you very much for listening, and good luck next week with the trading. Let's see how we get on.
Thanks, Julian. Thanks as always for your look at the market. Always look forward to your thoughts on it, and certainly an interesting period of time in the market for us. Next up, we've got Ash coming in from the UK. Ash is going to talk about market data. Hey, Ash, how you going?
Yeah, very good, very good. Interesting data this week, actually. Let me show you what we got. So. Where I find this the most fascinating is the very top one, Bitcoin. Look at the difference here. So what we're looking at here is the 3-year index, the 1.5-year index, and the 6-month index, all at 100%. So that all suggests that Bitcoin is, or the commercials are more concerned about the upside than they are about the downside. Now, when we look at that in a bit of detail down here on the chart, look what's happened here to the long and short positions, and look what's changed the index to the upside. Because what can change the index moving to 100% is no more buyers, and then the sellers just clear out. That would obviously push an index up because of the balance. But this hasn't happened. What's happened is the sellers have eased their way out, but the buyers have really come in aggressively. And you can look at this on the number here. Commercial percent change, 54% long and -7% short. So the shorts are clearing out and the longs are coming back into play. I think this is really fascinating. Now, we need to recognize that COT data is by no stretch, by no means a timing tool, but it is giving us an indication of what the bigger players are assuming and thinking about this market. And according to this, what they're assuming and thinking is that Bitcoin does go higher. That now we still need to find our attractive price levels, and I'm sure Shukri will talk more about that. But I do find that really interesting. You know, that anybody that is considering getting short on Bitcoin from here is this suggests that it's probably too late. And if you're already short, then it probably suggests that tightening up those stops is pretty wise. Now, the other one that's quite notable this week, there's a couple actually that are well worth talking about. And the first one is the pound. Now, this is the opposite end, 0%, 0%, 0%. So all of the longer term and the short term index are way down, suggesting that that the sellers are very, very strong. And we can see here, what's happened in the last week is that the longs have increased their position by 8%, but the shorts have increased their positions by 17%. So there's a 9% swing there as well in the shorts' favor, and the pound has been relatively strong. Now, the question then comes in, what would you trade the pound against? And we can just flip straight down to the dollar index down here, and we see that 66%, I like to see it around about 80% to kind of get a really strong bullish indication. So 66% isn't there, 54% again isn't there, but it's in the upper range rather than the lower range. And on the short term, only 18%. So bit of a mixed picture going on there. But this is where it gets interesting, is the commercials change over the last week, 65% long and only 21% short. So here we are seeing a 24% swing, if you like, in the longs' favor with the dollar. Now, these two things, the pound, suggesting that the shorts are increasing their positions, and the US dollar suggesting that they're increasing their long positions, suggests that a pound dollar short would be a potential trade. And if we very, very quickly just look at what the chart is for the pound, for what a pound dollar short would be, Now, of course, I'd want to know what the catalyst is going to be. I always want to know what the catalyst is going to be, and you'd have to check your data points to see what's going to be released this week to help you out with that. But this is a monthly chart, and you can see that we are right at the top end of this potential resistance line on the pound dollar. So, so I'll be looking for signs and signals for selling the pound dollar. And that would be in accordance to the most recent COT data with a dollar long and the pound short. And that wraps me up.
Cheers, Ash. Thank you very much for that. That Bitcoin stuff certainly is interesting, isn't it? And at the moment, just sitting below where it closed on Friday in our markets and in the open markets, and yeah, certainly a nice sell. And boy, if you didn't see some buyers queuing up around this level, you'd be a bit concerned, wouldn't you?
I think so, mate. I think so. I think the crypto market continues to be probably the most interesting space, I think, right now, and Bitcoin being the biggest ship really in the fleet. We would want to see some specific movement in that. So yeah, you're absolutely right. We'd want to see the buyers come in, but obviously that's got to manifest itself in the charts as well. So let's see what happens, because this is only one a potential look at that. Just the COT data. We're not really seeing. We need to kind of be able to build other evidence around Bitcoin to make sure that we be on the right side of it if we start buying.
I'm going to ask you the tough question, and I hope I don't throw you under the bus for this one, but. So COT tells us there are more people buying now, or the buyers are coming in, but price isn't going up. So what are the buyers doing? Well, why aren't buyers coming in and price going up?
Well, what the COT data, what the COT data is suggesting is that the commercials are more concerned with the upside than they are the downside. So they're increasing their hedge, if you like, to the upside rather than the downside. Yep. But we don't know. How much volume the particular basket of companies or people that are putting together the COT data actually make up the market. We don't know who these people are. We don't know how much they make up of the market. So we know that this particular group is more worried about the upside than it is the downside. But the market is vast, so it doesn't really tell us everything. It just tells us just a little bit to be aware that we need to go and do some investigation.
And it's probably fair to suggest, Ash, that while commercials are coming into Bitcoin, it's probably made up of a higher percentage of retail traders than most. Now, the commercials banding together and buying will still move the price, but there's probably a higher percentage of retail traders in crypto than there would be in most other products, right?
I would have thought so.
Plays out.
I would have thought so. And the other thing is, the COT data is obviously a US related part of the data set. And the thing that moved Bitcoin are institutions from other parts of the world as well. So that's the other thing to take into account.
Mate, that is good. Thank you very much for your time. I hope your barber remembered your name.
He did. We had a good chat, actually. Yep. He remembered the name. Booked in again for a few weeks' time. So I'm on the treadmill now with that.
Must be good for him to have business booking in once a week instead of once every few weeks instead of once every few years.
Oh, he loves it.
Cheers, mate. Thank you very much, Ash. That's our data, our COT seasonal stuff done for this week. We'll see how it plays out as the week rolls out this week. Next up for us is Ainslie with the Golden Edge. Should be talking about gold and Ainslie. Interesting times. We talked a little bit about last week about this 1816, 1817 level needing to hold. And on the big picture, it did hold, and gold all of a sudden looks quite bullish again.
Yay! Hi everyone. I hope you've had a good week. It's been a really interesting week on gold, as Julian's just prefaced it. We've had everything this week. We've had consolidation, we've had pullbacks, and then we had an absolute rampage on Friday, taking us all the way back up into this 1843 level. So it was pretty jolly good. As we discussed last week, we were hoping that price action would go in search of that 200 simple moving average, and it's certainly on its way there. We said somewhere between, that whole 1830, it did drop below that. It did give me a bit of heartburn, I must admit, coming down here into this whole 1809 area. But then we bounced. We didn't have a close below the weekly pivot, which is showing on my 4-hourly chart there, the weekly pivot, no close, held and respected the 50 EMA, and then lower high, and she took off on Friday. And it is, as Julian pointed out, we actually had that CPI information come out, which actually was what sent it soaring in the first place. And I'm just like, oh, please, would somebody please calculate real yields? And I think finally they did, because we do have real yields still being negative. And as soon as they're still being negative, then, as Julian suggested, one should open a bottle of champagne, which one did on Saturday night. Please, I did it on Saturday night after the markets had closed with some friends, and yeah, she's taking off again. So we have a really strong upward swing. The other thing that I have read in commentary over the weekend is there is a bit more of a reliance on gold as the pseudo fiat currency, meaning the backup currency to the US dollar being the reserve. But with the hoo-ha that's going on in crypto, and crypto, I think, with an underlying theme of trying to, well, displace gold as the alternative financial asset that's available, it still has proven to be the one that people are relying on and falling back onto as something as tangible, credible, boring as compared to, and boy, gold's been proven to be really boring throughout the year, but it's just also proven to be reliable. And I like reliable investments. I like something that I can invest in and I can trade in that isn't done on somebody making an offhanded comment on Saturday Night Live, for example, or other people making other comments. So for me, I'm finding gold really stable there. So will we see her keep going up to 1850? I wouldn't be surprised. That's a 200 simple moving average. Technically, will we expect it to have a bit of a choke around this area? Look, you've got a resistance level R1 on a monthly, so we know that's on quite a strong level. We've got the 200 simple moving average. As I said, on the weekly, we've broken out of this bull flag. Personally, I would like her to go straight to 2,200. That would be really good. It's not going to happen. We're going to have to take the stairwell up, I think, to that kind of level. But I believe that from now on, we're sort of broken out of that whole horrible consolidation, terrible retracement kind of area, and let's see where we go moving on. That's it for me, Paul, on gold.
Ainslie, you can literally hear the happiness in your voice.
Isn't it good? You know, instead of me saying, oh, well, sorry, guys, I'm talking about consolidation yet again. But yeah, Friday night was a good night. Friday night was good. So yes. And yes, we did pop the champagne, though. I was out with the girls on Saturday night. We did pop the champagne, I must admit. 1 or 3 bottles. Yes.
Yes, Ainslie, let's hope that it's 4 or 6 bottles next weekend.
Oh, okay. Chat soon.
Thank you very much. Look, next up we've got Shukri to talk cryptocurrencies. Still, Shukri, for mine, a market of opportunity, but a market which is really volatile, and the opportunities you've got to be bloody good to get right. Was that a 25 pip pullback on Bitcoin during the week?
Yeah, there was a pullback, but let me show you what's going on. And let's start at fundamentals first, because Bitcoin has on-chain data, which is good. You know, you can see a lot of things. Okay, now, you know, there was a tweet by Elon Musk that said everybody's scurrying, but I think this is a sign that people are getting more mature. I did not see any news saying there were a lot of liquidations. So during this time, I think people got burned already before the Elon dump. And, you know, this is already an extreme fear, which is a bullish sign. So, you know, things were quite, how do you say it? Things were quite normal, you know, like there was D-Day. It did happen on the 14th. It happened on the 13th for Bitcoin, although the predictions were from the 14th. So that's quite accurate. In fact, someone asked last night, so D-Day happened? Like, what happened? Nothing much, because people were already deleveraged, okay? So let's see what other things. Okay, this is what happened when Elon tweeted. People were rushing to put their Bitcoin into exchanges to sell. And then after that, hoo-ha, people started taking out of exchanges, which is bullish again. So, you know, this is the pump and dump of the Elon tweet. So let's see what happened to Bitcoin. There it was, the Elon dump, came back down, came back up. And I think we've been discussing this during the week. We knew that the predictions were that D-Day was supposed to happen on the 14th, and the cycle high for Bitcoin, you know, the rally. When does the rally start that goes into the summer? What a surprise. It's supposed to start today and bang on the dot. That thing started this morning. So there's something going on here, like Ash was saying, why is this going up? Why are the people, you know, why are the commercials not worried? Why are they preparing for going upside, right? It's the cycles in Bitcoin. They are extremely, extremely accurate. So it's like, I want it short, but I think I better be careful because there's a cycle turnaround, and there she goes again. And if this is like the other years, then we should see a rally in June and July. And then guess what? You know, what do we do, Paul? We have a rally, and then we have classes again, right? When we go back into a bear trend. So that's really what's happening. Again and again and again and again. It's like so amazing. So what you can do if you're going to do that, I'm going to show you an account. This is my eToro account. That's it now. That's like 535. If you add this, I think it's be 565, 575. All I'm doing.
Hold on, is that $560 or
535%?
It's 535% on your eToro account.
Yeah, and it will be like today, after today, I think it will be like 565, 575, 5 months.
Yeah.
So this is the most boring account in the world. It just follows the flow, you know. January was bullish, and then we had a correction, right? And then April was bullish, and I was very slow during May because of D-Day. But now, you know, it's probably going to go up June and July and August. We won't see the returns yet. I'm just doing this as trying to mimic Bitcoin and Ethereum by going through all the boring coins, you know, like Litecoin, Dash, Terra, Lumens, the old ones. So I don't have this thing related to a lot of volatility, and this is unleveraged. So that's why I can sleep at night, Ainsley. I don't do leverage on crypto. I totally avoid it.
Ha ha ha.
So,
yeah, right. So you
one
know,
of the really important things, Shukri, right?
Yeah.
That if you're going to trade crypto, first of all, know what the crap you're doing.
Yes.
And second of all, understand what you're actually risking, right? And if you can understand what you're actually risking, make good decisions. Look, it's just a market like any other market. You're a fair chance like any other market. The rewards are bigger. The dangers are real. Make some good decisions and then you go pretty well. And, you know, don't just close your eyes and throw data at the board and think it's going to work, because it's not going to work in crypto like it's not going to work in anything else, right?
Yeah, just watch your risk. You know, this market can go anywhere. But if it's really the classic thing of buying when there's blood on the streets. You say you want to do it, but you never do it. So sometimes what I try to do, because I know that Binance and all these exchanges are blowing people out, you know, during a downturn, you just put that buy order at a point where you're like kind of sure it won't hit. And you know what? If it hits, you wake up tomorrow morning with a big gain. Like, where did that come from? Okay, that's it. So,
right. Really, for most of this year, if you were prepared to buy down between sort of 45 and 50 and sell between 55 and 60, you were going to do okay, right? That has been now in a long-term range. And, you know, welcome to the real world, Bitcoin. You know, you've ranged for a few months.
It has. I'm getting bored. I have like 220,000 in Bitcoin. I'm getting bored, but that's okay. I'll just sleep on it. Not doing anything much now.
Look, this is we've got a question. It's probably not quite the question for this moment. David, look, I'll do it at the end of this. I'll do something and see if I can answer that for you. We're going to do some prizes later on as well. I'll see if I can answer that question. It's probably not something for the crypto stuff right now. I wouldn't have thought. Shukri, thank you very much for your
guys,
time.
I think crypto, I do minimum 4 hours, not less than that. I prefer daily, but if I'm going to go deep to find a buy point, 4 hours, that's it.
Yeah, look, I've got to say, if you're not a particularly experienced trader and you want to trade on the 1 or 5 minute chart, then the best thing you can do is just give that money to charity and save yourself the aggravation. You know, it's it's pretty tough down there to get into that kind of stuff if you're not experienced. I learned to trade on a 1 minute chart, and I've got to say it's the only time I can remember in my trading journey where I've hated trading, where it was stressful, difficult, no fun, and trading's fun. Yes, Maya, yes, please. And thank you very much, Shukri. We will move on. We are going to talk about oil. Ainslie, we got this one dead spot on last week, didn't we? I moved my stop up, put it underneath something. Price pulled back, missed me by about $1 and took off again. We've held on to that long, as we talked about doing on oil.
Yeah. Look, I mean, if you go to a daily chart, when I get to the daily chart, look, we had a bounce back off the resistance. So what? You should have expected that. Look at that price action. Yeah, it was pretty rugged back down through there. But it's exactly as we said it would be. It was just like, we're talking about this last Sunday, and it was like, well, okay, we expect it to move higher. It'll probably come and test this area up here. It did. Didn't expect it to go quite that low, but that's all right. No problem. It was also respecting this kind of area in here. If you look at this previous weekly pivot, came down, had a little look, and then she took back off again. The fundamentals that were happening there, our global supply is actually diminishing at the moment. So as that gets all mopped up, and the US colonial pipelines back on track, apparently the company paid the ransom to the cyber stalkers. So that was interesting. So I guess to me, my way of thinking is they paid the ransom once, they'll probably pay it again. So stand by and wait for some kind of impact as that happens in the market as well. This big move down through here, there was a lot happening fundamentally. India was just spiraling out of control with 400,000 people in one day being tested with COVID, and they're just saying this is just not looking good. But by the same token, by the time we got to this end of the week, got to Thursday and Friday, we were starting to look at the US colonial pipeline being open again, and people not actually drilling holes into people's cars looking for gasoline, which is some of the reports I'd heard out of the US. They were just so desperate to fill up trucks and their petrol guzzlers over there. So yeah, we're back on track. It was nice to get it right. I still think we're going higher here. On oil, if you look at it on the weekly chart, it's all looking up. The only thing that we're going to have that interesting, probably slow down again, and now around this resistance level of what was it, 66, 65. So just be wary when oil comes back into that. But hey, gee, we've had a really interesting week, up, down, sideways, and back up again. So next week, I'm expecting it to continue to the upside as well, with caveats of watch these levels. And I sleep well at night, Shukri, as well, even though I'm leveraged. I'm good with that. Thanks.
We're similar.
Exactly. Okay, and that's
Cheers, Ainslie.
On oil. Thanks.
Thank you very much for that, Ainslie. Thanks for your time this Sunday. Hopefully next week will continue to bring us. I'm hoping to see you so smiley and bubbly again next week. That would be for sure. Rightio, we are without Lloyd today. He is off at his pre-wedding dinner for his sister this evening, so I won't be joining us today, but we do have Geoff in the room. Geoff, it's time for the technician's 2 cents worth. Technically, what's going on, mate? It's been a big week.
Mate, it has in some circles, that's true. In my circles, I thought it was a little bit boring, to be honest. We were waiting for a few things to happen. That really never did. And let's hope that that will be the case. That won't be the case this week, and we'll actually get some action. I'm going to start with, well, really, I see two currencies that are really interesting. One of them is the yen, the other one is the CAD. I haven't included the yen in my charts this week because I think it's just a little bit too tricky now, but I'll certainly be watching things like Aussie yen and Kiwi yen for potential downside. I need to see a few things before that happens, however, as I will need to do on this particular pair, CAD Swiss. Now, CAD Swiss, as most of you who are in the show and in Ash and my show on the weekdays will know, I love to see bars that are reversal bars, that are key reversal bars. This is one of them, and it's on a weekly chart. It's CAD Swiss on the weekly chart. It's a key reversal bar, as I've noted down here. Also a double top, and it is at a resistance level. Now, that resistance level, if you have a look at the monthly chart, is very, very difficult to actually get that level because of the squeeze that we've had since the 1st of January 2015, of course, and we all know about that. However, I think we are at a strong resistance level, certainly on the weekly chart. Well, if you have a look at that trend line there on the monthly, you can see that we are at a resistance level. We've got a double top. We've got a horizontal level running through there as well. Do I want to trade that bar? Answer, no. That's the weekly chart. Reason, I think it's a little bit too tight on the monthly pivot, which could give us a little bit of a bounce. That said, if I narrow it down to the smaller time frames, I'll certainly be looking for a lower high in here somewhere. So daily chart, even 4-hourly chart, we can go down to, maybe we've even got that lower high at the moment. Weekly pivot's not going to move too much, given that we're pretty much at a doji week, but it's probably in here somewhere. Maybe a break and retest of that is interesting. Maybe even another trend line or trade line coming through here, hit that and go short. That is the pretty much the basis on which I'll be looking throughout the week. Aussie Swissies, interesting as well, not that much different, except maybe it has already turned over. Double top sitting here. But we've got a bit of a dilemma here. Which one do we take as the main theme? I've got a daily key resistance here, key reversal here in this bar here. Key reversal, for those of you who don't know, is just one that's going in a direction that's pointing me towards where it's headed. And this one here, because it's got a lower low than the previous bar and a close on or near its high, is telling me it wants to go long. However, we have had a break of this key level, this key horizontal level, which is around about the 70.25 mark or something like that. And we've also had a retest with this bar. So I'm not yet convinced which way this one's going, but I'm very keen on trading it at this level. So if we get back into that range, or if we close above the high of Friday's bar and then come back and retest that, the bottom of that horizontal level, aka descending triangle, I think there's probably a long on here. Maybe not go too far, but on the smaller time frames it may be tradable. The other way to look at it is that retest bar there may well be the precursor to further downside. So have a look at that one as well. It may be worth an entry underneath that bar, even with a stop loss above it. Interesting. There's a little bit of a confluence there in levels, but it's a place I'd like to trade from, but I'm not sure what the direction is just yet. The dollar Sing is another one that's interesting. And the reason it's interesting is because it's at the top of a range. We've had a very, very big false break of that range, come back inside, and now we're doing these ones again, top to bottom, bottom to top. Big key reversal bar there on the daily on Friday. I don't want to trade that because primarily it's a big bar that may not give us much reward. The middle of this range is stacked with pivots, and I'd much rather see a bounce off those and then a lower high and then look to trade it down to the short side. That's dollar Sing. Euro Aussie, an upside down one, if you like, of pretty much exactly what we looked at before on Aussie Swiss, pardon me, unsurprisingly. But again, we're at the top of a range here, and we have put in, it's not a key reversal bar, but it is a reversal bar off resistance. Interestingly, to me anyway, the daily resistance has produced what you can call it a tweezer top if you like. I'd prefer to see a tweezer top up here, to be honest, but it's certainly there. And same applies. I want to see a lower high here before I trade this short. The alternative, of course, is if we break that to the high side and maybe come back and retest it, then I think the long is in play. You do have a fairly key double bottom here, gone into range, yes, but there's a couple of significant higher lows in here as well. This could easily break out to the high side, and if it does, I think that that retest would be very, very interesting for a long. Going back to the CAD theme, and the top of, in my opinion, CAD's at resistance level. The same could be said of this pound CAD, which of course is going in the opposite direction. Interesting range that we've been in for quite some time, and I'm of the opinion that if we got a false break of this trade line on a weekly chart, and I'm talking probably July before we actually get there, but that theme is quite in my mind. Interesting, therefore, to understand why I'm bullish here. And I'm only bullish on the back of this, the daily key reversal bar and an inside bar. Otherwise, I think the bottom here is the best place to get into this, or let it break to the low side, come back here, retest it, and away we go. So that's the bigger picture. But on the inside of that, we've got this key reversal bar, this one here, followed by an inside bar, and it's one of the things that I do like to trade. The weekly pivot's going to come up to here, give us a little bit of support underneath that as well, one would think. And I think if you're willing to trade that bar, you could take profit at the monthly pivot. And if it does go south, get safe in the market at that level. If it goes long, then you'll get a free ride up to here somewhere, which would be pretty cool. So there's potentially an entry here. I want to see what the market does, obviously, on Monday morning. If it gaps, then everything can change. But at the moment, I think there's an entry above that bar, above Friday's bar. You'd probably want to sneak your stop loss below the swing. And then take your profit here at the monthly pivot, get safe in the market. If it goes, it goes, happy days. If it comes back and does what the bigger picture is telling me, then that doesn't matter. We'll still be a little bit of a winner. So there you go. Again, I think the CAD is at resistance. I think the yen needs a little bit of a change as well. And I'll be looking for Aussie yen and Kiwi yen early in the week to show me that. So that is my 2 cents worth.
It's funny, mate. I always have a feeling that your 2 cents worth is worth more than 2 cents. But thank you very much for the analysis. Always good to see a technician's view on these things. Look, we are going to wind this up today with a prize. I wanted to remind you guys that we'll be back next week, and that with the lockdown in Singapore, we will be looking to do a bit of extra content over coming weeks. Cheers, Geoff. We're doing a bit of extra content over coming weeks. We're going to start next Sunday with Julian doing 2 hours of a macro market overview before this show starts. So I think we start at 5:30 Sing. So around 3:30 Sing, we'll have Julian on for 2 hours doing that kind of macro market stuff that he's so good at, answering your questions as well. We'll be offering a bit of extra content. We're talking on Monday about what else we can do during this lockdown period to see if we can keep Singaporeans with a little bit to do inside those houses. I'm sure that, for all of us, that stuff is a bit tough. So we're going to try and make it as good as we possibly can for you guys. Now, before we go tonight, we are going to do a prize draw. We'll start to do a prize draw regularly on this show. The prize is a $50 ATW voucher, and Mai will spread the word. Now, if you're on Facebook or YouTube and you write your name in, then we will put you into the draw for this. So if you're on Facebook or YouTube, you can just post your name and Mai, add it to the draw quickly, and we will do that. And if you've asked any questions today, we will put you in. I'm not sure, hi, how are you is a question, but if you've asked any questions, while we're doing that, I will quickly answer David's question. It's a bit beyond what we're doing in this show. There are plenty of shows we can do this for David. But David was asking, I'm trying to decide my high time frame for today trading entry on the 5 minute. Like I've been trying to mark levels on the daily, but I'm supposed to wait for pullbacks before. Look, what I do when I'm doing levels, when I'm doing time frames, David, is I miss one. So first of all, I would advise you, unless you're a professional, an experienced trader, not to trade on a 5 minute chart. It's just a graveyard for retail traders. It's just about making brokers as much money as they can possibly make. I would stay away. But if you're insistent on it, what I do when I'm doing time frames is I miss one level. So if I was going to trade a 5 minute chart, I'd skip the 15, I'd do my analysis on a 30. Now, I don't really like being that short of time frame. Often what I do is I'll do my analysis on a daily and trade on an hourly, or do my analysis on a 4-hourly and trade on a 30-minute. I don't think I'd be prepared to go below an hour, actually. So I'd probably do the hour as a analysis area, and then I would trade on the 5-minute. But again, I want to encourage you that all that trading on a 5-minute chart does is keep you very, very busy. And in my view, not easy as far as making money on those time frames. There tends to be, big weeks, bad weeks, big weeks, bad weeks, and it's quite tough emotionally to take that ride. I'd encourage you to trade on longer time frames, but if you're going to, maybe an hour for your analysis. Maya, are we ready? Right. Maya's now going to bring up her screen, and we're going to do a $50 ATW credit giveaway. You can have this, any ATW product, you can put this towards that you like. Here we go. These are the people in the room. We've got Roy on YouTube. Thanks for posting in that you're in there. If you're on YouTube and you want to do these things, just let us know. Oh, it's tight. Is it Richard? Richard, you're just going to need to post it and let us know that you're there. If you post it in the next 15 seconds, you will get the prize. If you don't, we'll do a redraw. So all you've got to do is say, there we are. Richard's put his hand up. Richard, I'd like you to put something in the comments, because then Mike can reply to you and tell you that she will send the details off to James. She can put in a couple of extra details from you. Can you just put a chat to panelists? Thanks, Richard. Perfect. Richard's our winner. He will get a $50 ATW voucher. Thanks for joining us, guys. And look, if you have any ideas on products that we can offer over the next 3 or 4 weeks to help the lockdown pass, and let me know. I'm happy to have a look at anything we can do during this time. I know from having done a couple of these things myself that they're no fun, and Singaporeans have done them before and done them bloody well, and we'd like to provide you some content at some time and etc. that suits you guys, to see if we can help pass the time. So if you have any ideas, let us know and we will do that. Otherwise, have a good week trading. And remember, guys, when you're working from home, the temptation to overtrade is pretty strong. Just stay calm and make good decisions. That's it from me, and thanks to the team for the generous nature of this sharing. Thanks to all of you who joined us today. Thank you guys all very much. As you all know, this show will now get cut up into individual sections for each of the traders and reposted on YouTube in about half an hour's time. And after that, we will replay this whole session tomorrow morning as well. Cheers, guys. Thanks for joining us. See you guys next week or before. See you all. Thanks, guys. See you, Paul.